Hello, Raphael. Can you hear me?
I can hear you, sir. I can hear you.
Okay, take care and take care of everything.
All right, sir. Good evening, everyone. Apostle, we didn't see you yesterday. Oh, you made complaint of your network not being good. I hope it's better today. Mm, okay. Please, can you all hear me? Okay, okay. Let's wait for others to join us. Let's still give them some time. Let's still give them some time to join us. Yesterday's class was late, man. Apostle, you missed. Yesterday's class was an interesting one. And we hope today gets this same energy, the same energy. Let's just wait for others. We'll be doing more of today will be more of answer and question, practical sections, what we've done so far. Wherever you guys are finding challenges, candlestick interpretations, support resistance, market structure, market flow. So I think this time today is for you guys to talk. At least we'll have 1 hour, 30 minutes of pure discussions, pure practicals. 1 hour, 30 minutes of pure practicals. Then I will share. Someone asked me to share something yesterday, so I will still do that today. And let's just wait. 8:15 Saturday. Wow, these guys are not here. Why? 'Self-assessment. Why do I want to be a trader? This is how many page? I think behind my sister. That's why I don't like using this. I don't like using this. And still 3 in the class. Let's see if I can share my screen. See if we have. I think we're somewhat here. Okay. Well, still waiting on you guys. Still waiting on you guys. This guy. Okay. Then, yep, okay. Here we are. Oh, uh, we this price action. I don't understand what happened here. Good evening, Richard. You're welcome. Hope you had a wonderful day today. Mm, mm, mm. Yeah, great. It's great. I had a great day. Thank you for asking. The topic for today is we'll be doing something on today is just a practical day, a practical sections of all the things we've learned so far. I would have loved us to major basically on trading strategy and the components, candlesticks. So we'll talk more on candlesticks, we'll talk more on the interpretation of candlesticks, and the part of manipulation in the markets. Manipulation. Then I think you guys should be in charge of the class of today. Ask whatever questions you have, whatever challenge you've been having. I want you guys to take charge. So we'll put hands together and give out solutions and solve them. Put our heads together and solve them. So we'll be doing something on top-down analysis. Top-down analysis on maybe 2 pairs. So we don't take much of our time. Top-down analysis on 2 pairs. We could do gold and Euro USD. Gold and Euro USD. Top-down analysis on 2 pairs. Well, let me start right away. Welcome everybody to this wonderful section. This is going to be like a day to the last day of your class. Tomorrow will be the final day for your training. Today is like a day of rehearsing, a day of getting everything you've learned, putting all the pieces together. We spent almost 3 weeks. This is almost 3 weeks. Tomorrow will make it the 3rd week, which is 9 weekends. And I want to believe to this point, you've learned some few things. Yes, you might not have gotten to that type of mastery yet, but you've learned some things. Today is like, let me share my screen. So you're seeing my screen right now. Please type yes, as you can see from the topic. Type yes if you can see my screen. Okay, I hope you can see my screen. Type yes if you can see my screen. I don't know, my system is hanging. I know what's happening to it. Okay, okay then. Okay. What window you see I should move? And have two at the same time. Just like okay, so this is what we're doing today, more of case studies and trading sections analysis. Now, for the trading section analysis, we'll be doing something on historical price actions, analyzing historical price data and historical data and price action. What we're trying to do here is top-down, we call it top-down analysis. Top-down analysis, how you analyze the market. Top-down analysis, how you analyze the market. How you analyze the market. The way you analyze the market from during the weekend is quite different from the way you analyze the daytime. How do I mean? During the weekend, the market is static. It's not moving, and it gives us that advantage of looking at every detail we can find. Of looking at every details we can find. Whatever your conclusion is during the week, take that into the week, and you only find trades in that direction because that is what you have seen as the high probability for you to earn money. That is what you've seen as the high probability to earn money. So I'll be heading straight to our charts. And please, you need to write down some things you might notice. You need to write down some things you might see. I'll be using a strategy that might seem a bit strange, but it's still a strategy and you can opt for it as well. Good evening, Adebayo, you're welcome. So I'll be using the strategy, I'll be using the ICT strategy to analyze. That looks a little bit advanced, but we'll be incorporating these elements into it. Market structure for direction, candlestick, resistance and support. I'd love to add liquidity because of some of us who understand the concept of liquidity already. Liquidity and let's stop there. So these are the little elements we'll use. Now, market structure will be for direction identification, candlestick to confirm the direction identification, resistance and support where I believe the market should have a turnover or a reversal, or where I believe the market has left already. Liquidity, that is where is the money, where is our big boys targeting? What point are they looking to take profits? What point are they looking to take profit? You can write this down, guys. Everything you see in the market is the big boys they do two things in the market. What they do in the market is this. They target what we call liquidity. Liquidity. Someone asked a question yesterday that what is liquidity? Liquidity generally means money. They target what we call money. And money, you can find this money where on every swing point of the market, you'll find this at every equal highs and equal lows. Equal highs and equal lows. I'll show us this on the charts. You'll find it on every equal highs and equal lows. Let me share my screen. Let me share my chart so we can. Okay. Hope you can all see my chart now. Hope you can all see my chart. Yeah, fair value gap. I don't want to add it because that is advanced. I don't want to put fair value gap for those who don't understand fair value gap. I'll be integrating a few concepts of ICT and a few of the retail form of analysis. I don't want to add all of the advanced concepts in. Many might get confused. And I might still incorporate it. We never can tell though. Okay, this is a weekly chart. Now, depending on the kind of trader you are, some people love to start the analysis from the monthly chart. They'll go over to the monthly, start every from the monthly, dive it down to, some will take it down to the 1 minute. Now, this is one thing I want you to understand. When you start your analysis, whenever you want to start your top-down analysis, let's assume you are whatever trader you are. Obviously, it is your weekly outlook that will judge how you will trade during the week. So let's take it that we're trying to do our weekly outlook. You can start from the monthly time frame, get down to the weekly, get down to the daily, and possibly the 4 hours. Then you stop there. From your analysis from the monthly, weekly, daily to the 4 hour, you should have a better understanding of the possible things the market will do. Possible things the market will do or should do rather. So starting with this, let me write the concepts I'll be using. I'll be using the concept of market structure. That is for direction. I'll be using the concept of resistance and support. Resistance and support. I'll be using the concept of liquidity. I'll be using the concept of candlestick patterns. Candlestick, let me say candlestick manipulations. Let me look the patterns, manipulations, and readings. Now, as you notice, some people love using trend lines. No, I'm not using no indicator here. As you can see, I didn't put indicator for any reason. No indicators here. So let's get started. Now, I'm starting my analysis from the monthly time frame. What am I seeing? The first thing I do on the monthly time frame is to bring my screen, as in zoom in, or to say zoom out. I will zoom out to see the broader view. All I can see here is a market that is going well upwards. It tells us this is a bullish on a long-term view. Now, what is my recent bullish on a long-term view? Let me use, let me see if I can move this thing. I can move it. Wow. Now, for market direction, the first thing I'll do on the monthly is to identify what market structure. Now, to identify market structure, you look at the swing points. What are swing points? The highest highs and the highest lows. Swing points are the highest highs and the highest lows. You look at the swing points in the market, the highest highs and the highest lows. If you are bullish. If you are bearish, you look at the lower highs and the lower lows. For a swing points. Now, this swing point has to be the highest of all points there, the highest point. If you look at this chart, this is the swing point. This is another swing point. This is a swing point, even though this is covering it. This is another swing point. A swing point has 3 candles. Let me use this for example. This is a candle. This is another candle. And this is another candle. Let's assume this is a red candle. Anyone dotted is a red candle. This is another red candle. And this is a green candle. The last one is a green candle. Any candle that has 2 candles with lower lows beside it is a swing point. That's a swing candle. It's a swing. That area is a swing. This is a swing. As you can see, there's a candle here. That's a swing. This is another swing. This is another swing. There should be a swing here. This is another swing. This is a swing. This is a swing. So those are swing points. But what we'll be picking the highest of all the swing points. The highest of all the swing points. So the highest swing points here are, that is for our market structure to understand our direction on the broader view. This is the highest point I can see. This is the lowest point I can see. The market took that one here. That's the highest point. From here to here, coming down here, this is another lowest point. And we have this high again. What pair is this? Gold. Okay. And we have this as another swing point currently. Now, something the market does is this. This is a bullish move. Now we know the market on a broader view is bullish. Like I made mention, we'll be looking at liquidity. What is liquidity? Liquidity are swing points where stop loss are meant to be. Points where stop loss are meant to be. There are lots of points here where liquidity are. Now, if the market is moving like this, every high you see here, is a liquidity point. Every high you see here. Why? Because some people have their stop loss here, 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 and they still believe the market is going lower. But if the big boys are to come in and they want to make this bullish, what would they be targeting? These are the things they'll be targeting. They'll be coming for what we call stop hunts. They'll be coming to take your stop hunts. That is why you see at times the market will just come, take you out, and it will bounce back down again. And you begin to ask what's happening. That's because they know that your stop loss can be found here. They know your stop loss can be found here. So these are points where you should be looking out for if the market is to move downwards. At times, let me give you an example. Think, okay, this is one. Let me clean this. This is one. Before this move, look at this move. The market came down. Some people would think this is a retracement. What did he do again? It went back up. It created a high, a short-term high. I'm beginning to use advanced terms. Well, let's go, keep going. It created a short-term high. This is a short-term high. Gave that a low. Went higher again. It didn't break this high. And this was the high that took out this high. And it didn't break it. It came down to take the low here. Why? Because some people have their stop loss here. Some people feel the market has resumed the uptrend. They feel the market has resumed its uptrend from this place because it came down here, created this, and went back. Why for some of us, we see this as liquidity where they are coming to take before they continue back up. Where they are coming to take before they continue back up. Now you ask yourself, how can you identify these things? Well, as time goes on, you begin to see them. When you begin to apply these things, you begin to see them. So we are applying support and market structure. Now we already know we are bullish. If you look at this, from this range to this range, we are bullish on the broader view. The second thing is to apply candlestick. At this level, after the break of this high, after the break of this level, this market structure, anytime the market breaks a structure, let's see like this, the market breaks a structure, always expect to pull back. Always expect to pull back. Always expect the market to pull back anytime soon. It can't keep going higher. Always expect a pullback. And in that pullback, that is where you look for your entry to say, I want to continue. We call this trend continuation. Trend continuation. So we're looking for what? A pullback to the downside. Mind you, this is a monthly chart. So can we guess how many months it will take for the market to come down to this level? So that is how we should be seeing a gold sell for a very long time. Gold sell for a very long time. So now on seeing this, how do we even know gold might start selling anytime soon? We already know it has broken structure. Now we are looking at the most recent candlesticks at the top. Look at the most recent candlesticks at the top. What is happening to them? The first one here was a strong candlestick. This one, let me take this light off. It's wrong. Okay. Hold on, please. I don't know what this. Oh, my sister. Oh, God. It is well. Okay, now look at this candlestick. Look at this candlestick. Initially, let's look at the formation of that candlestick. Initially, it went up. Let me zoom it well. Okay. Initially, we had this strong candlestick. So our next assumption should be the next candlestick that will come up should be a strong one. Yes, it was a strong candle. But what happened? The buyers took control. The market opened here, came down a little bit. Buyers took control and they pushed it to the upside. Before the end of the month, the sellers came in and they dragged it down to close here. Even though it closed above the previous candle high, it's still telling us there are still elements of buyers. Yes, the sellers came in so strong, but we still have the buyers ruling that market at that time. The second candlestick came up again. We had the same repetition, opened, because we already knew we had strength of buyers inside. So we're expecting the market to come and take what we have here. Now, always remember something, that there is liquidity at every high and low point of the market, high and low point of candlesticks. This candlestick has liquidity. This one has liquidity. This one has liquidity. This one has liquidity. But I don't want to bore you or confuse you with that part. This one has liquidity. This one has liquidity. That is why you see when the candle comes, when the market comes and takes out liquidity, it will bounce back up. It will want to bounce back up, but it bounces back up from a level. It doesn't just bounce like that. It bounces back up from a level. So let's continue. Now we already saw this candle. There was a rejection to the downside, which tells us the buyers are getting really weak. Sellers are in control. Sellers are coming in. But we're still expecting the buyers to come take out something here. And they did that. They came in, they went up, took out that liquidity, and they sold it back. And they sold it back. Now, this was last month. They did this last month, which is still telling us that the buyer are still very much, the sellers are still very much available. Now, the new month, the month we are in, what are we seeing? Possibly we might see this because we've seen the takeout of this candle already. We should be expecting a sell. We should be expecting a sell this month. Before the end of the month, we should be expecting a bearish candle to form for this month. A bearish candle to form for this month, which will be what? A pullback, which will be a pullback of the bullish trend. So we should be expecting something around here. Here is our support and resistance. As you can see, this is a key level where the market touch, bounce back, they touch the same thing, bounce back, touch again and come back. So this will be a support level. And support is a range level. It's not just a point. You could have it this way, you could have it this way. You can pick your support to be a point between your candle highs and the body of the candle. The body of the first one, whichever comes first. The body of the first one. Now I have three candles that were rejected. This one was rejected, this one was rejected, this one was rejected. So I'll be expecting this for the month on the monthly chart before we see this happening again, maybe to this point, but we never can tell. But what I am seeing now is a bearish flow on the monthly chart for the month. A bearish flow on the monthly chart for the month. We've confirmed that by this candlestick taking out this high and coming down to give us a long week rejection week. So we should be seeing a candlestick coming to take out this point and eventually drop to the downside. Now we'll go deeper. What we're doing now is multi-time frame analysis. So we'll go deeper into what we were just saying by moving down to the weekly time frame. So I'll go straight into the weekly time frame with my mindset that the market should sell, that we should be seeing a sell market anytime soon. Now, what are we seeing on the weekly time frame? On the weekly time frame, I am seeing this happen again. Now we do the same thing you did on the monthly time frame. The same thing you did on the monthly time frame, multi-time frame analysis. What you did. Now we already know we are bullish on the monthly time frame, and we're taking that into the weekly time frame based on market structure. But on the most recent move, we are expecting a pullback on the monthly time frame. Let's see if the weekly time frame confirms that. If the weekly time frame confirms that, so what do? Let's say I pick out my new high or low. I can decide to pick this one. This gave here, and this one gave this one. So I'm picking this range to confirm if we are bearish on the recent move, or we want to continue, or we are still joking around there. Now look at this part of price action. Look at this part of price action. On the general view now, not single candlesticks. The market went up, came down, went back up, came down. It established a point of temporary, we call it range structure. It established a point of temporary lows and temporary highs. Can you see it? Temporary lows and temporary high. Now we already have a range structure happening around here, which means the market is not prepared to start selling yet, as we have seen on the monthly time frame. It is not ready to start selling yet. Now it is still in a range. Anytime it comes down here, it will bounce up. If it comes down to this support area, comes down here, it will bounce up. If it comes down here, it will bounce up. Now, what are we looking at? Let's go deeper into that part. Let's go deeper into this area here. Now, on this part, looking at single candlestick patterns that are forming. I'll start with this candle. When this candle came down, it gave us a swing low that took out the liquidity here. And it closed inside this candlestick, thereby telling us the sellers do not have strength to push it up. And the next candle that opened afterwards was a buy candle, and the market bought to this level. This week, we had a close at this high. There is liquidity here at this high. There is liquidity here at this high. The market took this liquidity, remained this one. The market opened here the next week, took out this liquidity, thereby telling us, after taking that liquidity, it's now telling us we have a possibility of the market selling. After taking out this liquidity, and it sold, closing below this candlestick, which now gave us the probability of a sell week 3 weeks ago. And we had a little sell before we had another sell last 2 weeks. And this sell came in, close below this. Now, some people will say, since we have this sell, why aren't we having another sell here? Mind you, the broader view of what you're looking at is a range market. The market is ranging between two levels, here and here. There are lots of, if you're on the advanced parts, there's what we call rejection blocks. There are lots of rejection around here, and that's why you're seeing weeks. There are a lot of buyers here that are waiting. So we're seeing a range. Now, what we expect the market could possibly do this week is this. We might possibly see the market come into this area in the forthcoming week, come into this area. It will push into this area and possibly see a bounce to support the monthly, buyers. Might possibly see a push into this candle, into this bullish candle, which can act as a minor resistance, give us a rejection candle, taking out the liquidity here. And that will support a bias for a sell. Now, the sell might not start this week, maybe anytime next week, but it's possible for us to see a buy this week. Now, to confirm that, now inside the monthly sell is now where we are now seeing buy. Inside that monthly sell, we are now seeing buys inside. We can head over to the daily to confirm that buy I just talked about. Now, on the daily time frame, this is what we saw on the weekly and that we analyzed. Now we'll go inside again. We'll go deep inside. What did we see? Let me use these lines. We have a high here that was taken out based on market structure. We have a low here that was taken out. This was taken out, which is liquidity graph. They came, they took it, and they went back up. Look at it. They came, they took the low here. A lot of people had their stop loss here. They took it by this move. They went back up, took some people who had stop loss here, which is liquidity, money. They took out those people, and now they are coming back. After taking them, they came back here again to take some people who had their stop loss here. even though they didn't come below this. They came in, took some people here who entered with their stop loss, and now they act as if they are going back up. But what will be the challenge of them going back up? What will be their challenge? As you already know, we have resistance here. There's a tiny resistance here. There's a tiny resistance here, which will believe the market. And that was what the market did on, when was that? On Wednesday. We had a resistance there, and this was the candle showing us that resistance. And that was why we had that sell on Thursday. We had a sell on Thursday because of the resistance we saw on Wednesday, that rejection we saw on Wednesday. See the rejection on Wednesday. For those who candlestick pattern, shooting star around a resistance area. A shooting star candlestick pattern around a resistance area. This is a minor resistance. So they came into that part, rejected, and we saw a sell taking out the previous day low, taking out the previous day low, which is also a rejection block around here. Now, on Friday, it started buying. Where are they buying to? Let me tell you something. Like I told you on the weekly chart, we might see buy this week. There's money here. There's liquidity here. And that is what they are targeting. There's liquidity here as well. I'm beginning to point out where there is money, people stop loss. They need to go and collect those money before they continue. They need to gather liquidity before they continue to sell. So it's possible we see this going for the week up to this level before we see a bounce. Before we see a bounce. Or we might see it buy, sorry. Put it here. Might see it buy to this level before we see a bounce. So this could take 2 days before we begin to see a reversal to the downside. That was why I said we might see it happen next week and not this coming week. For this week, I'm seeing a buy on gold, sorry. I'm seeing a buy on gold. Now, let me go deep down into the 4 hours to see if we are on the right track. Yes, on the 4 hours, what are we seeing? This is the latest by market structure. This is the new high, and this is the low that was broken. And this is the new established low. So we have something like this, and like this. And now we're expecting something like this and like this. Something like that and like that. That's what we're expecting. Mind you, this is a high that can be taken out as the market can decide to go anywhere to take out liquidity because all it finds is liquidity. On the H4, we have another reason why the market should go up. This thing. That was what we were saying. Mind you, on the daily, we saw a buy. Now we are confirming that buy is on the H4. This is another reason why the market should go up. So it's possible we might see this and a little bit of retest and continuation to the upside, maybe to come for this. If it doesn't bounce on this part, where is my, if it doesn't bounce here, if it doesn't bounce here on this resistance, if it doesn't bounce on this resistance level, we should see it targeting this high. So it's possible we might see something like this, buy, a bounce here, a pullback, and maybe a reason to go up. But if it doesn't, we might see this coming down, take out this low, or push the upside, and we see our sell starting out. Now, during the analysis, try as much as possible to leave, do not be too rigid. Why? Because all you're doing is just trying to analyze. Do not be rigid. Be open to both directions. Market can do. When you analyze bearish, try as much to see the bullish side of it too. Try as much to see reasons for it to range as well. So that when the market starts acting, you already have your plan When it's bullish, this is what I want to do. When it's bearish, this is what I want to do. When it's ranging, this is what I want to do. So you already have everything in check, and you're just waiting for one of them to activate before you take part. Now we already have our buyers on gold to say you might possibly see a push to the upside coming this week. Then maybe midweek, around Wednesday, Thursday, we should see the creation of the sell coming in anytime. And if it doesn't, we'll be seeing a push to the upside around here to come take out what we have here before we see this coming out. So it will create a long market structure of highs and lows, which will now be like this. And it push to the downside. It push to the downside. Any question? Any question? Any question? Any question? Any question? Unmute and let's talk. Unmute and let's talk. Unmute and let's talk. As you can see, I used almost everything. I used my market structure to get my direction. I used my support and resistance to find a possibly point where market can reverse, which is what I have shown here. Or this line, this very box I drew. I used candlestick to verify the direction I am seeing to know if it will drop or not. So I would like, if anyone want to ask a question, ask before we continue.
All right, so I have a question, sir.
Okay.
All right, thank you so much for that detailed explanation. I want to ask, in all this, is there a role, a predictive role of using indicator? Let's say using moving averages, do they maybe provide some kind of confluence in helping you make decisions as to where the market would likely move to?
Head to,
So basically,
yes.
my question, if there is any role of indicators in how you analyze your trades. Thank you.
Yes, there is. It depends on your understanding of that indicator. Let's assume I want to use the moving average. Now, my analysis started from the monthly time frame. My analysis started from the monthly time frame, trying to get the directions of the market. And mind you, in using an indicator, be it a moving average, a directional indicator, a moving average, and what's this oscillatory dimensional average, I guess, fractals. There are different periods for each moving average. If you're working with the monthly chart, you should have a higher period of moving average. Now, when I mean higher period of moving average, this part where you see 50, you can adjust it to 100 or 200 MA, 100 or 200. And when I mean MA, see the MA method around here, you can change it to either simple, exponential, simple, or exponential. Some use smooth and some use lightweighted. It depends on your strategy and your knowledge of how to use it. So we'll work with simple. Then we okay it. Now let's go to the monthly time frame and see if we have anything. Now this is it. The monthly time frame, the moving average is below our candlestick. It's below the range. It's below the candlestick, now acting as a dynamic support, but I don't want to go around there too. Now, when your candlestick is below your moving average, it tells you the market is what? When your candlestick is above the moving average, it tells you we are seeing an overview of a bullish market. Do you understand? An overview of a bullish market. Now, when I mean overview, it's just telling you what we can generally see on a long-term basis. On a long-term basis. But now to deep dive inside, like you're going inside with your naked eyes as if you're using a needle to find the most current move. The most current move. Now, if you look at this as a bullish trend, let's assume you look at the market and you conclude this is going to be a buy market. Mind you, every candle you see here is 1 month though. Every candle you see on the monthly chart is a 1 month candle. You neglect what is happening here or what has happened in recent times. You neglect the action of candlestick. You just decide, I'm seeing moving average up, market structure up, market structure up, the market should be buying Jari. You enter. You enter. If you have enough money to hold you, the market might do this for periods of months. If it decides to turn back from here, it will now turn again for another period of months before it counts you in profit. That is, if you have enough money that can even contain this move, contain this 1 month, this month, not even 1 month, because you don't know how many months it might take. I can contain this move before it even starts going back up again. Now, instead of waiting for that, we already have an overview. We need to see what has happened in recent times. This is what has happened in the last 3 months. We head over to the weekly chart to take us inside that part. Now, inside that part, we are less concerned with things that has happened here. That's none of our business. Everything that has happened here, we don't care anymore. Because this is historical now. We don't care. All we want now is the current data we are looking at. This current data. And when you look at what we have here, what are you seeing? That is why you saw gold doing up and down movement. Except for scalpers who were able to catch a short move. But for you to catch a long move like this, gold was ranging. As you can see. No definite high, no definite low. A ranging market goes up and down within a defined area. A trending market gives you a clear higher highs. And a bearish market gives you clear lower highs and lower lows. So in a situation where you find the market acting like this is a good market for scalpers. Some people trade this market this is what they do. When the market starts acting like this, you already know this place is a point of support and here's a point of resistance. So anytime the market adds here, give us a candlestick pattern, we will buy. If we get to this point, give us a bearish candlestick pattern, we'll sell until we see a breakout. Until we see a breakout of any of the levels, either high or low. Now we have this happening. This is our candle. This is our moving average. Answering your question, this is our moving average on the weekly time frame. As you can see, the moving average is still below our candlesticks, which still tells us that the market is bullish on the higher view. Now, let me give you a secret. You can add 2, 3 candles moving averages together. You can add 2, 3 moving averages together. Let's add another moving average. Let me add another moving average, but this time it will be moving average 200. I'll make it moving average 100. Moving average 100. Let me color it blue. Okay, still higher. Let me add another moving average. I'll put moving average 50. Let me color it, give it green. This is even closer to price now. This is closer to price. So for you to do this, let me take out this moving average. I'll use 200, 50, and 20. I'll use 20. And let me use gray. Now, if you see something, this is the secret I'm talking about now. We call them the 3 moving averages. 3 moving averages. If all the 3 moving averages are below the candlestick structure, as you can see here, all the 3 candlesticks, all the moving averages are below this price move. It tells you it's a strong bullish market. That is a strong bullish market. Now, what are you waiting for? You're waiting for market to break down, and these moving averages will act as support and resistance. Now, support and resistance, like in as what? It's not like they will prevent the market from coming down. We already have our monthly support area here, monthly support zone. It is still the issue of confluence, so we're still talking about confluence now. Now we have our moving average in that area of support already. This is telling us that this area is a strong zone. If the market, if price should drop into this area.
Okay.
It's telling us that this area is a strong zone. Why? Because we already have moving average, which is acting as a dynamic support and resistance. And we have support and resistance zones acting as what? Hindrances as well. So we have two things keying in a point. Now, if the market drops to that level, what you should be expecting is a reversal candlestick pattern.
Yes.
Like a pin bar, shooting star, or an engulfing candle. Or a bullish engulfing candle that will now tell you, okay, this zone has held its place. The buyers are ready to push. Do you understand now? The buyers are ready to push. So I hope I've answered your question.
Yes. Yes,
Okay.
sir.
Yes, thank you.
Welcome. So any other person with question? Let's talk. This is a practical class. This is a practical class. No question. Unmute yourself and ask questions. Okay, go ahead.
I just joined the meeting now, so I've been following what you're explaining. And for now, there's been no question because I came in late. So hopefully,
Okay.
there's something I was studying in as regards candlestick.
Okay.
What's this thing called? Is it doji?
Doji.
Now, yeah, it's just the candlesticks. It doesn't form it like a complete candlestick. It's just like a cross. And normally, from my study, it says that once that stick, that very candlestick forms, the market reverses automatically. So I day before yesterday, I observed it on the trend on my chart. Now, my question is, will it always reverse automatically? Like, must it always go bearish after that dodgy candlestick is formed? Or
now we have see the psychology behind a doji candle is this. The psychology behind a doji is something like this. Yes, I'm coming, Alibai. I'll answer your question. Something like this. It happens at every point of every area of support or area of resistance. Area of support or area of resistance. Now, what does it mean? What happens? What brings about a doji candle? A doji is formed because of equal demand and equal supply at that particular time. It could be a 1 hour doji. When it's a 1 hour doji, it means within that period of 1 hour, the buyers were demanding, the sellers were supplying. Do you understand? The buyers wanted something, the sellers were supplying at equal. So there was strength, there was equilibrium at that point. No decision can be made. Nobody was stronger. Nobody can take active, can determine the direction of the market at that time. So when you see it happens around areas of support and areas of resistance. Majorly, areas of support and areas of resistance. Ignore the colors. Ignore the colors. The colors means nothing. It can be green, it can be blue, it can form in a bearish trend and give you a, okay, this is one example, sir. See one example here now. Mind you, this is a bearish trend, isn't it? But we have one in between here. We have a doji here. Now, if you check where that doji formed, look at the area where it formed. Look at the past where it formed. You will see it formed at an area of support. Why do I mean area of support? Look at this point. There was a rejection here. There was rejection here. There was rejection here. Let me put my support there. But did it hold?
Okay.
Did it hold?
Yes.
Can you say it did not hold now? Let me zoom in. Look at it here. It didn't hold. Why? That is, when you see that doji, you are not supposed to take any action. Wait, it is just, we call it indecision. Indecision in the market. At that point, they already know this is a resistance area, a support area. They already know, because the market had come there before and it reacted. So they already know this is a resistance, a support area. When they came back, a rejection happened. The idea already, and they are trying to fight it out. What should we do? What shouldn't we do? What should we do? What shouldn't we do? At that level,
Covenant.
at that level, when you saw that, so at that level, when you saw that, you should wait for the formation of the next candlestick. Wait for the formation of the next candlestick. And this is the part where we talk about candlestick manipulation. This is the full candlestick. This is the high of the candlestick, and this is the low of the candlestick. If the market is going to go up, if it's going to go up, let me draw this. Let's assume this is the doji. This is a resistance, a support area. If the market is going to go up, this is the low of the doji. This is the high of the doji. If the market is going to go bullish, it will first of all come down, take out this low. The candle will not close, though. Go back up and start forming a bullish candle. Then go up and close above it. Here will be a bullish candle. And this is a bearish, a doji. Here will be our open. Here will be our close with our high and our low here. So once you see this action, it tells you the buyers are in and the market will possibly do what? Reverse. Okay, this is an example. Thank God I've not seen this one myself. See an example here. See this point here. See this level here. This is the doji. This is another doji. Because we wanted reversing, what happened? The market came open first, came down, took out this, went up, and the next thing you see is a what? A buy. Even though it came here to do some ranging activity, we already know it wants to start buying because it stopped at the resistance area. This is a support area, sorry. That zone is a support zone. Let's pick the body of the body and the lowest wick. So I'll be picking this area as my zone. This is the lowest body and this is the lowest wick. So this is my zone and I expect something to happen. And you can see the market came towards that area, pick this, and the next thing we saw a push to the upside. So that issue of automatic reversals with a doji, you need to wait for confirmation from the next candle formation. You need to wait for confirmation from the next candle formation. Do you understand? You wait for confirmation from the next candle formation before you act. The candlestick you can trust alive for immediate rejection are these candlestick patterns. This one's a pin bar, as you can see them here. Pin bar. You saw immediate rejection and a bullish move. So when you see them at areas of support and resistance, sharply, you do justice. You do justice to them. Now, these things are not 100% though. So you shouldn't look at it and say, that is why we use what? Risk management. Do you understand? That is why we use risk management. But if you stay religious to them, you should end up being profitable. This is another one. Another one to the upside. And engulfing. I like the engulfing. As you can see, this is an engulfing candle here. This is an engulfing. This one swallowed this one, and you saw the move, bearish move. Supported the bearish move. At areas of support and resistance. Areas of support and resistance. Any other question? Okay, someone asked a question. Let me check. They said, for confluence, must the period be 20, 50, and 200? We have various combinations of moving average period. We have various combinations. We have the combination of, we have the combination of 20, we have 10, 20, and 50. 10, 20, and 15. These are for lower time frames. But if you're working on the monthly time frame, you go for a higher period. Period of 200, 200, 100, and 50. And the three must align. They must be in the same direction. If you see them intertwining among themselves, because I noticed something about that one too the other time. The question do not make me go there. I noticed the two of intertwining between the 200, okay, 20, 200, okay, the red color, and 100, blue color. Now see something. See what happened here. It's not like this one. Did you notice anything here? Did you guys notice anything here? Hello? Did you guys notice anything there? Look at it very well. Let me take out this support and resistance lines. I knew I saw something the other time, so look at this area. What did you see, and what's the difference with it here? Is there any difference? Any difference?
Yes, the crossing of the moving averages.
Good. You see the crossing of the moving averages. As I said, confluence matters. If you had done your, maybe you had done market structure up by, and you saw this. Within that area where we had that cross, it tells you the market is ranging. It tells you you experience a ranging market. And that was what we saw. Look at this move from here. Came down. We have this buy, and we had this sell here. Now, on a normal, you wouldn't expect the market to come down and take out this low, right? But it did come down here and took the low before going back up. So here is an abnormality. You shouldn't expect something. What you should be looking out for is a spread out of your moving average. A spread out of your moving average like this. We call it, there are times we call it rainbow. You should be looking for something like this. in alignment with market structure, price action, market structure. You see this spread, you see this one, you know that's a strong bullish trend. If it happens the other way around, you know that's a strong bearish trend. But when you begin to have the intertwining or the crosses, like we have here, look at this one. Begin to have crosses of moving averages. Look at the price action. You will see this thing is not giving anything. That is why you see the market will come up, go down, come up, go down, come up. You're buying down, the next thing that's not to sell. So these are the kind of market. That is why we talked about trading plan yesterday. You need a trading plan to understand the kind of trader you are. Are you a trend following trader? Are you a reversal trend following trader who is only looking out for good trends before you trade? Are you a reversal trader? All you look for are reversal trades. Reversal trader. Are you a range trader? Your strategy is all about range. That is, you like trading something like this. You can easily see patterns around here. You can easily see something like this, have it figured out, have it specified, so that it will help your brain in recognizing these patterns, and it won't push you into trading anyhow. It won't push you into trading anyhow. These are the reasons why most of us lose money in the markets. Why? Because we want to trade any market, we shall want to trade every day. There are days you, okay, like this place now. If you're a weekly trader that loves trading on the 1 week time frame, there's no how, and you're a trend following trader, you can't pick a trade from here now. There's nothing here for you to do. Because this market is not giving you certainty of a move, a long move. Now, but if you're a range trader, you know this is your opportunity. And you want to stick with the highs and the lows you're looking out for in the market. You know if it comes down here, it will bounce because you already bounced here and it did the same thing the second time here. So at this junction, you should be waiting for a bounce to the downside. If it happens, you take it. We had a little breakout here. It came down back into that support area again. As a range trader, you want to take it to buy. Unfortunately for whoever took that trade, it went and we saw a very large breakout like we have here. I'll have a breakout to the upside like we have here. Do you understand? So that was why I was emphasizing more on having a trading plan. So to help you dissect what you want from the market, what you are looking at from the market. Some people didn't trade around here. Some didn't do anything. Some went down. Some who were trading the lower time frames will go down into the lower time frames and they will see opportunities, because if you're seeing a range on a higher time frame, on the lower time frame, there's a trend. There's a trend on the lower time frame. It all depends on the type of trader you are. If you're the type of trader who trades from the lower time frame, you will see an opportunity. You'll definitely see opportunity to trade. Like all of this now, this is an opportunity for someone who is a trend trader on the lower time frame. You definitely see something to trade. So that's why we do what we call the top-down analysis. We start from the monthly, and we keep dissecting until we get to the point where we believe the market will give us opportunity to take part. But it makes you what? It makes you greedy. Because most times you just form things you are not seeing. Your brain will just form things you are not seeing and you want to take part. At the end of the day, you lose money. When your eye clear, you come back and you see, you like, did I see this before I took this trade? Did I see this one form before I took this trade? So it brings about greed, and that is where the part of having that knowledge, your awareness of your trading psychology comes into play. Trying to understand when your mind is pushing you to it and when logic is saying do it. Your emotional mind and logic. Knowing the part of logic, knowing the part of your emotional mind. Yes, any other question? Any other question? Any other question?
Sir,
Okay, go ahead.
okay, this one is more of a comment, sir. I'm joining this
Okay, sir.
class for the first time. I
Yes,
just
I can
stumbled
see.
upon. Yes, sir. And I want to ask if you have any platform where young upcoming traders interact and maybe grow, help each other to grow. I would actually love
Yes,
to keep
there's a
opportunities like
platform.
this.
There's a platform. It will be posted before the end of the class. It will be posted there, so you can join the trading channel and the trading discussion group.
All right. Thank you so much, sir.
You're very welcome. Any other question, please? If people don't want to ask question, Abby, it's all right though. I think I'm beginning to have expert traders in the house. So everything clear. Everything clear. How many of us have tried developing our own strategies? Personalized strategies. Okay, Samuel said everything clear. Glory to God. So please, for the concept of developing your strategy, like I said, okay, go ahead, Samuel. Go ahead. What's happening? Okay. No place to unmute. Okay, let me unmute you. Sorry. I did that the other time. I don't know. You cannot talk.
Good evening, sir.
Good evening.
Thank you so much. Though this class tonight, my network has been taking me out and taking me in. So the question I want to ask is not really about tonight's class. It's something I've been observing. Though I don't
Okay.
know, talking about the fundamentals in the market, about news, events, and all of
Okay.
that.
Okay, I should
So,
talk more
so
on
like
fundamentals.
yes, sir. Then the question I want to ask is that always when news are being released, it's always going against the direction of the market. So I don't know the psychology or the things, what is behind all of these things. So
All right, let me give you a hint. At times we are just being stubborn and we act in a way we are not supposed to act against this market. See, if you try to understand your psychology, you make good money from this market though. If you're not being stubborn, you're not being greedy. You see that part of being greedy? It does a lot of things to us. This is news. Let me mark that region. This is news. This is the handwork of news. This is the handwork of news. I think it's more clear on the euro pairs. Let me see. I think it's more clear on the euro pairs. Looking for a pair. Okay. More clear on the euro pairs. Let me go back to euro and use this one. Okay. Okay, this is it. This is news. This one are news. This is what happened on Thursday. This happened on Thursday afternoon. Now, when I analyzed this trade, I already knew Euro USD was going to sell. After my analysis, I already knew it will sell. Because at this level here, it was already on a higher time frame zone, I think on 4 hours or daily. Yes, it was already on my zone on the daily. So I was just waiting for a confirmation of that move. It was already on my zone here. So I was waiting for a confirmation. That was why you can see I still have a sell on it on the demo. I was just waiting to confirm that move. Now, when news came out, let's check. Let me open my chart so we can. Let me open the news platform. Let me use Forex Factory. ForexFactory.com. Something they do with news is this: they go after liquidities. So first of all, use the news to push for liquidity before they move in your direction. They push for liquidity before they move in your direction. Please be patient. My screen, okay. I want to share my browser with you guys. Okay. So we can all see the news. On where are we looking at? What part of the chart are we looking at? We're looking at 6th, 7th of, no, not 7th. We're looking at 13th. 13th of June. Okay, 13th of June. On Thursday, we had this. We're expecting this core CPI around 130. We're expecting this. We're looking at these three things to happen. We're expecting this. Now, when news came out, it came out negative for the US dollar. Everything worked out negatively for the US dollar. And when it is negative against the US dollar, let's imagine you have a pair. You have a pair to be Euro USD. This is something, let's use logic now. Euro USD. And the news came out negative. You were expecting for the meantime the euro to be stronger, because fundamentals had weakened this part, so it shows this has no strength against this at that particular time. And that is why we saw that spike. Where's my chart? And that was why we saw this spike that day, this bullish spike, which lasted for almost 1 hour. This spike. But because we already are in a very strong sell trend, what the market will do is the market will use that to come and take your stop loss. Do you know some people entered here? Sorry, let me clean. Some people knew this market was going to sell. Yes, they already knew. Some people entered here and they had their what? Their stop loss here. Some people had their stop loss here. Some people already waited for this and saw this fall. Some people had stop losses here. And had their entries here. Some people had already breaking even because they felt this is what I was waiting for, because I already knew it might happen. I was waiting for the market to come into this place. That was why I missed the initial entry. So I was waiting for this to happen like this, then I'll start selling. And the market did not push enough to come there. This was what I was waiting for. So I didn't see it happen. I had to wait before I enter again. Now, the logic of news is this. When you're trading news, let's say your trend, because if you're trading during news, let's say your trend is bearish. When there's a release of news, inside this bearish trend, you will see tiny, this is in trend. Inside this move, you will see tiny, we call them short-term highs and short-term lows. Short-term highs, tiny, that will form the long one. When news comes out, all this short time, there are stop losses above. Some people have multiple entries with stop losses above. So they will push forth to go and collect enough money to anywhere they feel they are good before you see the continuation of that move to the downside. Before you see a continuation of that move again to the downside. Now, look at this price action here again. Let's look at this one. This is news too. This is news. Before it happened, market, this is another news. Look at what the market was doing. It was already selling. We're expecting this push. Now the news came, because some people had stop loss here already. What did he do? He went back, took out that stop loss and played for the end of that day. Now, some people thought, okay, this thing should start selling anytime. So some were still entering for the sell. They were still entering for the sell. They were having stop loss here. It kept going up. took them out before we saw that bounce. Now it has comfortably settled its liquidity. It has settled itself, and we're seeing a push to the downside. Did the same thing there. So anytime you have a news, that is why most times for those of us who are in the trading channel, we do say one is either you take partials if you're in profit, or you take your trades to break even. That is if you know. At times the news comes and it takes us into favor. It will just come and to push our trade to profits. But majority of the times they go after liquidity first before they come out. So we call this the trading. Is a trading strategy what we call news fading. You trade news fade. You allow it to first of all push to do whatever it wants to do. Then when it starts rejecting, you cannot enter. That's the first reactive style. You enter and you just trade along to the normal direction, as long as you know what the direction of the market is before that time. As long as you know what the direction is before that time. Let's say the market is selling and news was about coming out, you see it push to the upside. You wait for it to fail. How does it fail? You see this rejection candle, you see this wick. That tells you this thing is will start in the direction, its original direction. And all you need to do is to wait for the next candle, join, have your stop loss above here. So in case it reduces to go, that will just protect you out from losing too much money. And you continue. So I hope I've answered your question, Samuel. Hope I've answered your question, Samuel. Any other question? Any other question? Yes, I said we were going to analyze Euro USD. Yes, for Euro USD, I'm expecting a sell. I'm expecting a sell for Euro USD. It already started the big sell. Already started the big sell already. Look at market structure. We had a high. We took out this low. We had a new low. We gave us this new high, and we had a low that took out this high. So we are within this range. We're expecting something like this to happen. And what did we see? And what did we see? The market went up, came down. Now we're seeing a mini range, a mini structure there. That's a range market there. And we saw a take of liquidity. And the market came down to break a mini structure. We call this change of character. Came down, changing character to support our bearish move. Support this bearish move. So we have this in support of that. Now we are seeing the beginning of a bearish move, and this came down. We saw a retest of that move, a retest of this level, of this support level, resistance level, and we saw this push. So Monday for the week, we should be expecting a continuation to take out this low. And once we see a break here, you expect a pullback to within this range and a continuation to this point. So for the next how many weeks, which I don't know, maybe 1 month, 2 months, 3 months, we should expect Euro USD to keep selling. Sell to this, probably this month, to this area. Keep selling. For the next 2 weeks, 3 weeks, should be expecting a sell on Euro USD, which is a swing trade. This is a swing trade we can all take part in. I'm expecting this on Euro USD. So I want to know if we have any question. Question. Let me see if I can paste the channel for Dr. Jude. Just bear with me. find that link. Let me find a link for you to join. Okay. Copy and so I already paste the link in the chat section. Dr. Jude, you can join the Telegram channel via that link. You can join the Telegram, the discussion channel via that link. I joined via that link. So we post analysis, discussions.
Sir, I can't see the link, sir.
It's there in the web chat, webinar chats, webinar chat. Webinar chats. You should be able to see it now. Webinar chats. Let me see if I can send it to you privately. Let's see how possible that is. Okay, I think I can. So you should find it in your inbox or wherever that I just send it to you privately. So please, if you are not part of our Telegram channel, you can find the link in the chat section below. I just posted the link there. Click on it and join us there. So let's do things on the market ahead of this week. A lot of things should be happening, a lot of money to be made this week. I think the market is clear for the week. We're having a clear market on gold. We're having a clear market on pound USD. We're having a clear market on Euro USD. So we should be able to make some good money this week. This week on the market, yeah. Okay, how come you guys can't see the link? What's happening? You are yet to understand how this thing works. I just sent it to you privately too, Adebayo. You should be able to see it. If you're not a part of the group, you can access the link and join us. Now, I want to invite, you're welcome. In the absence of no question, I'll invite my boss to come give us a little bit of talk and some advice and his expertise. Hello, sir. Hello, sir. Is it there? Okay, I think his network is bad. His network is bad. So let me drop some things for us, please. Whenever taking Forex trading serious is very important if you want to succeed in this field, like in this industry. Some of us, it has taken us years to get to this point of trying to dissect the market, analyze, look at it. We know how many hours we've spent looking at this thing on a daily basis. Some of you don't have time to even look at the charts. All you need is money. It's good, you need the money, but you also need to work for the money to come. If you join the trading channel today, which is good, a signal group, so to say, you'll be giving signals. Do you think that person will give you signal forever? No. If you learn how to trade, at any time, you can decide to open your charts, look at it, make some money out of it, without you waiting for somebody to give you signals or not. What I'm trying to say in essence is this: if you want to learn how to trade, like you want to master trading, become a master trader, understand these things, you have to spend time with the charts. You have to see, there's this part of discipline that you need to inculcate. Discipline in the sense that every detail matters. Because why? Your money is involved. If you take a wrong step and you put your money on the wrong step, you will lose. So even if you lose in the market, let it be that you took the right step, but it is the market doing its thing. It happens, like in the case of news now. Maybe you've seen a downtrend, a sell market, and you entered for the sell, but news came in, took you out. You already know, yes, you saw the trend already. You can re-enter again. That's a different thing. But you not knowing when to buy or sell, you just open pa pa, bo pa, bo pa. Yes, it's interesting, very sweet when you're doing bo pa, pa, bo. But your money is reading and it's working on your psychology, because why? The next time you want to trade, you become fearful. You become scared of entering the market. Do you understand? You become fearful, you become scared. So a little bit of knowledge, spending time in studying the market, 1 hour per day if you're the busy type. 1 hour every day, it won't do anything. It will add more value. I'm telling you. If you do 1 hour every day for the next 1 month, you would have become something else in the market. The next 1 month, you would have become something else in the market. But maybe after our discussion now, you close your chat. Bye-bye. See, whenever we have class again, and you want to make money from this thing, it's not going to work like that. It's just like someone who wants to become a medical doctor, and you're not ready to spend. Okay, look at medical doctors now. Do you know how many years they spend before becoming medical doctors? They don't all become medical doctors overnight. And you're in a profession that can, one, all you need to, you've chosen trading as something you want to do. That at most you give it 6 months to master. At most, you give it 6 months to master. It can pay you for the rest of your life. Turn you into a millionaire overnight. When I mean overnight, you understand? And you're not ready to give it that time of learning. Come on. Some of us are really making a mistake. Is that greed part now? That greedy part of Africans want it now. Want everything solved now. Yes, it's good. Wanting now is good, but we should tread with care too. We should tread with care. We should tread with care. So I wouldn't know if anyone has 1 or 2 things to add. We'll appreciate you. If you have 1 or 2 things to add, word of wisdom to share, you can unmute and let's hear you out. Let's hear you out. Unmute and let's hear you out. Anything from anybody? Anything from anybody? The recorded section will be posted on YouTube, as you already have the remaining. So, Dr. Okoro, if you don't mind me asking, have you been trading before?
All right. Thank you so much, sir. When you were talking, I was actually so much struck by what you said, and I wish everybody can take a lead from that. I actually started learning Forex. I think that was shortly before the outbreak of COVID. Okay. So that was when I started. But then along the line, somehow I lost interest along the line. So I became engaged in so many other things, and also somehow the interest waned. And then looking back, I wouldn't say that I'm regretting now, because I still use the time to achieve some other things. But if I had been more consistent, and if I had not given up the time I did, I know where I would have been today, because I know so many of my colleagues and mates then that continued. And I tell you, so many of them outside the country now, self-sponsored, you get, and are doing very well. So this is something that everybody should take a leaf from and be consistent in it. One thing I've come to notice is that a lot of people, when it comes to trading, wants to earn without learning. And that is what leads to a crash. And once they crash, they begin to criticize Forex, that it is a scam, or that it is not learnable, or that it doesn't work. But it does. I have seen it transform so many lives. So I'm actually so happy to stumble upon this platform the time and I did, and I'm not planning on giving up again anytime soon. So thank you so much for
You're,
kind words.
you're highly welcome. You're highly welcome. I want to see more of you, please. Let us be very active in this. Let us be active in what we do. Everyone is learning here. Me that I'm hosting, I'm learning as well. We learn every day. Nothing is new. Like I told them yesterday, I shared this with you guys yesterday. I knew how many strategies I learned before stumbling on the one, and I felt, I think I can work with it. Sorry, my network just went out. So sorry. So as I was saying, please, we should all try to endeavor, especially that part of strategy. Let's try to work something out around that strategy part. Stay keen to it. I already gave that component. See, look at the way I'm hammering on those components. I have my reasons. When I was analyzing this market this few minutes ago, you notice I was doing something. I used market structure to identify the structure and the order flow of the market. That is the direction. What flow is the market going through? What is it doing right now? I had to use candlestick to confirm. So you should have a template on the way you want to address your analysis pattern. We must not do it the same way. But whichever way the market makes sense to you, analyze it in that pattern, have your results. Do you understand? Learn. That is why I said learn a strategy. My WhatsApp is open. If you have difficulty with strategy, we can work something out. We'll see how we can work a strategy that will fit you in. Do you understand? We'll work something around it and see how you can fit into that strategy. So I hope I've not said too much and I've not taken much of your time tonight. Tomorrow we'll be having the last day of the training, same time, same 8 p.m. tomorrow. I guess that will be hosted by my boss tomorrow because there's a lot we need to discuss tomorrow. We're looking at creating profitable traders because I know if one person is profitable here, a family is being touched and that knowledge can be passed on to somebody in that family. So it will go around. So that is what we're looking out for. That is what we're planning to do, and that is what we want to happen. You understand? That's our own quota of making Nigeria a better place. Let's share the knowledge. Let's share the knowledge. A lot of money to be made. Imagine you making just 0.01% of $7.3 trillion in a day. You can't even make 0.01, 0.001. But just imagine what you can do in 7.3 flowing over the market every day. A 20 pips profit in a day. I was talking of somebody yesterday. I don't know you guys know him. Kenechukwu, that's his name. I checked on his trade today. It is just a 44 pip, a 44 pip trade. And he made $22,000 from that trade in one day. And he had like 6 positions. He made $200,000 that day. $200,000 in that day. This person, I'm telling you, forgive me if I have to say it, is just 30 years old. And he's a billionaire via Forex. He's a billionaire via Forex. I knew him since 2019. He has been trading since 2019. Since 2019. So you can imagine doing such amounts of money, not even up to that, just do $2,000 monthly, $3,000 monthly. You can imagine the level at which your life would be right now and your family. So all I'm trying to do is to encourage us not to give up. It might look hard when you start, but with the proper guidance, you will get it right. You will get it right. So Samuel, you want to say something? Samuel, do you want to say something? Okay, go ahead. Go ahead, Samuel.
So I don't really have much to say, just to appreciate you for the platform.
Okay, you're welcome.
Me already, I've learned a lot already since the sessions. This webinar. It has been an awesome time. And before I came here, I know the accounts of money I've blown accounts and blown accounts. And all these things happen because of the lack of knowledge of this.
Yes, most definitely it happens that way. If you lack knowledge, you'll be discouraged at one part because it will be as if these things are not working. It will be as if it's not even working at all, but it's a lie. It works. All you need is knowledge. You can't grow overnight in this game. You will need to learn it. You will need to learn. Ame, you were saying something? You wanted to say something? Ame, I can hear you. Okay, go ahead. I just unmute you, so click on the unmute button. Ame, we can't hear you. Talk now.
Yo, okay. I had wanted to just say thank you for the opportunity, and we'll do the needful on our end, because I know for a period of time, and then I started hearing of in that in 20.
What happened?
Are you getting me?
Yes, go ahead. Go ahead.
Okay, so I was saying that I just wanted to say thank you for the opportunity to learn.
You're very
We're
welcome.
hopeful we'll do the needful on our end. And because I understand that, okay, like after I blew that account, I just told myself, when you leave this thing for now. But stumbling on the webinar, and then I was like, okay, let me just, gather more information and retreat back, study, and, maybe at the end of the month again with little knowledge and getting more information to start the journey afresh. And hopefully we will not let me not use the word we, I will not let you down, because you've actually invested a lot of information into me as a person, and I will do the need from my end. Thank you very much,
God will
sir.
help us all. You're very welcome. God will help
Amen.
us all. Please, again, I want to still lay emphasis on the trading channel. You guys join the trading channel so we can track ourselves out. Let's track ourselves out. Let's see how we develop into what we want to develop into. Developing into profitable traders, earning huge at the end of the month, at the end of the week, at the end of the year. So please, because that's the only thing that's the only part where we can say, okay, are we growing or we are not? Are we really impacting lives or we are not? So that's the only measurable parameters we have. Please help us join, and I know God will help all of us. God will strengthen us all. All right, in the absence of nothing, I want to say thank you all for spending this time with me. And thank you for making this class an interesting one. May God bless you all, bless your families. And tomorrow is another wonderful day. I hope and I pray that we all meet tomorrow, same time. And let's have fun. Let's enjoy. Let's have fun. Let's enjoy, as we've always done. It's all right. Omoyeni, please write me in the WhatsApp group regarding your demo and what live account. I could do a voice call with you. So we'll talk about it. You're very welcome, Adebayo. So I say good night to everyone. Meet you guys tomorrow.